It's Equity News on Equity Access, your cross-section of the stock markets and of developments of the Zimbabwean economy. Thank you for joining us as we broadcast live from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get started. Zimbabwe has been reclassified from a low-income economy to a low-middle income status. This is according to the latest World Bank report. Now, according to the report, the lower income class stands at 1,025 GDP per capita, while the lower middle income status stands at 1,025 United States dollars to 3,995. Zimbabwe has been reclassified alongside Senegal and Comoros. The nation intends to reach an upper middle class economy by the year 2030. As forex strategies continue to loom over the economy, government is unable to print passports for its citizens as the printing material has to be imported. It is reported that it now takes north of 18 months to obtain a passport. Micos Limited has issued a cautionary statement indicating a delay in the publication of its financials to right up to this point. This is in light of the adjustments of Statutory Instrument 142, which reintroduced the Zimbabwean dollar and obliterated the multi-currency regime which had been in effect since 2009. Micos also reiterated the sale of one of its hotel units to a foreign partner. This will be elaborated more at an EGM soon to be convened. The first derivatives market in East Africa and the second in Africa started trading today on the Nairobi Securities Exchange. The derivatives market will enable investors to diversify their investments, managing risk as well as deploy funds more efficiently. The Nigerian Central Bank has injected $190 million into the Nigerian forex market in a bid to establish convergence between the interbank market and the Bureau de Change. This is meant to boost the Naira, which has strengthened of late, trading at 364 Naira against the United States dollar. This concludes our evening news bulletin. More to follow in our news review. Don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures, just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Welcome back, viewers. It's now time for news review, and with me on set is economist Tinashe Kaduo. Tinashe, good evening and welcome to news review.
Good evening, Ben. Thank you so much.
Beautiful. Now let's talk about these, of course, recent developments, particularly the World Bank reclassification of Zimbabwe as a lower middle income economy. How important is that, considering the fact that we're coming from a lower position and now we are in a seemingly better position in as far as World Bank is concerned?
Yeah, these classifications by the World Bank, they're actually good in terms of our credit rating and as well in terms of our ability, to access concessional lending from that multilateral lender. But if you look at these numbers per se, one aspect there is when the World Bank calculates its gross national income, it uses what it calls the Atlas method in terms of computing that per capita income. The Atlas method, it actually uses your nominal GDP in your country's monetary value, then it changes it using a deflator, which is the Atlas conversion factor. The Atlas conversion factor, it encompasses the exchange rate that was prevailing over that period, as well as the past 2 years average exchange rates. Then that exchange rate will also be factored in or be deflated by an adjusting factor, which is which encompasses the SDR, which is actually your the index that is calculated by the IMF, which tracks the currencies of the leading economies in the world. The leading economies being your China, your Euro area currencies, your United Kingdom, and the Japan. So the World Bank uses that methodology such that it eliminates those variations or those movements in per capita income that is caused by inflation or the disparity between your country's inflation and the world inflation. But if you look at Zimbabwe over the period which we are discussing over July, your June 2019 and the past June 2018, that's when we had structural shifts in the economy. That's where it also coincides with a period where the finance minister actually rebased this economy. As such, we actually produced higher GDP figures. Then also our exchange rate, looking at that period, it was actually stable over the much of its period, 1:1 with the US dollar. Then you look at after the June 30, when the central bank introduced those measures, the SI 142, we have seen the official exchange rate actually rising at a faster pace. So I believe that given all those changes in the economy, maybe the 1,790 per capita income might be a bit overstated given such dynamics. But if you look at the methodology itself, I don't doubt the World Bank methodology, but I think these numbers would make much sense if they were calculated at a time when the interbank rate was a bit much more stable. But as it is now, considering that they use that rate to come up with such a figure, considering it right now, I think the numbers might be a bit overstated. But as it is, being a lower middle income country, it's actually positive, and it sends some positive sentiments to investors out there.
According to you, what would be the right standing for Zimbabwe?
I think in terms of the classification, if you look at what's happening in the economy, I think Zim, you look at the standard of life over the past trends. I think I've tried to put on this graph. When you see in 1962 there we had a $270 per capita income. 1980 when we inherited the economy, we had $900 per capita. Then it peaked, I think, to around 1,200 there in 1982. Then we moved into 1991. Zimbabwe will always have those 10-year cycles where we have an economic peak, then a slump after every 10 years. Then we peaked there in 1991 to 850, then we go down 2,510, then our lowest there 330, but it was much higher than the 1962s. Then we had another 10 in 2008. Then right here now we are at 1,790.
So that's
But
a
for me,
historic peak.
that's a historic peak. But to me now, if you look at these numbers, gross national income per se, sometimes it doesn't make much sense because you'll be just analyzing your national income. Your national income, which is just income that you are getting from your production activities, then you multiply it by your price level. So what it means now, to me, I believe a much better yardstick is to measure using the standards of living, as well as some other social
because
social,
I mean there
social
is
effects there.
that discrepancy between that improvement vis-a-vis what you're actually seeing on the ground. I mean, at the moment there are a lot of issues that embattle the beloved jewel of Africa, and yet there seems to be that positive report. How do we marry the two?
So to me, to tell someone that we are now at 1,790 dollars per person in Zimbabwe, and we are at a better position compared to, let's say, 2012, where we were, according to World Bank numbers, where we were around 990. Then if you compare the standards of living between those two periods, you would see that someone would say in 2012 we were actually better off than in 2018. But the one major weakness of these per capita incomes is that sometimes it doesn't measure your distribution of wealth. Maybe in terms of that sharp rise to 1,790, maybe it's a result of that 20% who are actually well off, at the expense of those who are actually marginalized. So to me, I actually like the UN's classification much better than the World Bank, because the World Bank is actually
Would you suggest that maybe you go by the Gini coefficient?
Yeah, I think it's much better. It's much better than this one. This one, it's actually used much if you want to get a bit of credit from those multilateral lenders and something like that. But in terms of standards of living, the UN's methodology, it's much better. But if you look at it, even the IMF has its own classifications, which is actually different from that of the World Bank, and also different from that of the UN. UN classifies as developed, developing, and least developed. The World Bank uses your higher income, then lower middle income, and something like that, and lower income countries. Then the IMF uses higher income, emerging markets, emerging developing markets, and something like that. They all have different methodologies in coming up with such classifications.
Let's talk about Nigeria's injection of $200 million into the interbank rate.
You've seen over the past years, Nigeria traditionally it used to use a fixed exchange rate regime. Then it migrated from a fixed exchange rate regime to a semi-free floating exchange rate regime. But over the past years, it has been grappling with multiple exchange rates, which were emanating from those exchange rates being offered by the banks, and those being offered by the Beirut Change, then also those being offered by the actual parallel market. So over the years, the Central Bank of Nigeria has been trying to converge those interest rates, which were being the exchange rates, which were being offered in the formal market, which comprises of the Beirut changes and the banks. You have seen that the banks, they offer a bit lower rates when compared to Beirut changes. So I think with this $200 million injection, it will help to try to have a convergence in terms of those rates being offered in the formal market.
What can Zimbabwe extract from the Nigerian model?
If you look at the difference between the Nigerian model and the Zimbabwean model, is that for Nigeria, it's a much bigger economy, which has a lower number of banks. So banks, they were offering lower rates, and much of the exchanges was being done by Beirut changes. But if you look at Zimbabwe has relatively higher number of banks per capita when compared to Nigeria. So in terms of that disparity between your Beirut changes and your banks in Zimbabwe, I don't think there will be anything like that. So, but in terms of having a convergence between the parallel market rate and the official interbank rate, I think in Zimbabwe right now we have seen actually over the past 2 days or so, we have seen actually your interbank rate is moving at a faster pace and is actually at a level higher than your parallel market rate, meaning that there is now a bit of convergence. The difference there is the price that is being charged for convenience. Because if you go to a bank and you want to exchange, let's say for instance, your $100 maybe is being converted to an equivalent of your 1,000 local money. But that 1,000 local money, you can't withdraw it from your bank over the counter as cash. Maybe there might be limits, maybe a limit of $300. But at parallel market, you can get it as cash. So that's why maybe like now the parallel market rate is offering a lower rate when compared to the interbank rate. They are now pricing that price that you get for convenience and easy cash. So I think now when the central bank maybe injects those additional notes and coins that it promised over the past couple of days, I think it will help to ease that demand for cash, and we might see the parallel market actually disappearing here in Zimbabwe.
Well, thank you, Tinashe, for the perspectives. Thank you, viewers, for staying with us. Up next is a look at the stock markets in Markets Daily. Welcome back, viewers. It's now time for Markets Daily, and with me is investment analyst Anesu Chimbumo. Anesu, good evening and welcome to the show.
Thank you, Eben. How are you doing today?
Can't want to complain. Should only get better. Yourself?
I'm alright, thank you.
Beautiful. Take it away.
Okay. The market has continued on the downward slope today, coming off 1.43%, 1.44%, and for the all-share and the industrials index in that respective order. The industrial index settled at 639.29 points, effectively slimming down the year-to-date gain to about 31.24%. The mining's index did come off 0.24%. Top 10 index did drop 1.9% off its point level for it to settle at 181.31 points. Now, consequent to that top 10 index movement, there was INSCO coming off 6.22% to settle at 232.84 cents, while Cassava and Econet lit up 4.62% and 4.95 in respective order. Cassava did settle at 164.98 cents. With that regard, now Padenga is now only up 146.53% on a year-to-date basis, and is still the best performing counter on that top 10 index there on a year-to-date basis gain. Now the all-share index is now down 6.51% on a week-to-date basis, measuring last Wednesday to today. Mining's index is at 7.02 negative 7.02%, while the top 10 index is down 8.06%, still showing its strong dominance within the market. Now, for our risers and fallers, Mash Holdings did add 11.86% on its share value to settle at 5 cents today. Old Mutual did also jump up 5.94, an anomaly for top 10 counters, even though the JSE counter did go up about 1.24% in the same time frame. Midtech selling at 0.41% after adding 2.5%. Citco also going up 2.05%. For it to settle at 179.97 cents. Now, Ariston has come off 16.3% for it to settle 4.52 cents. Now, Ariston is one of my most favorite counters. Very scarce stock for you to find on the market. It is a very valuable counter. I usually like it because of its main operations, which are in farming, and it being an export business. It has it's got 86% of its business coming in as forex revenues, and so even though they did suffer a natural hazard beginning of the year that could probably affect their earnings, they are still looking very good in terms of volumes being sold, also having a very good very good prices on the international market there for most of their produce, which would be your macadamia, your and other palm fruits. Now, Lafarge did let up 12.14%. They're into cement there for the construction sector. Construction sector is one sector that is expected to be a sector that should boom along with the economy. When we do come out of the recession that we are in, we should be expecting some good earnings for such kind of counters. Insco selling at 232.84 cents. We have already touched on those counters there on the top 10 index. Now, for our forex market, it seems as if we are almost nearing a complete convergence, but there is close relations now with the interbank market rate selling at 8.6 today, while the parallel market is at about 9.2, with some traders going up as high as 9.6 to the RTD to the Zim dollar, while the old mutual implied rate is at 9.29 to the Zim dollar. And that is it from me and the markets today.
Well, thank you, Anesu. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. From the Equity Access team and I, Donkey, and ciao!